All right, everybody, very warm welcome. It is Monday, and we are having a holiday here in Canada, and also there is a holiday in US. So probably there's gonna be a very thin liquidity in these markets, and also it's a Monday, so it gets really tricky to get the idea where this market is gonna head to, because without having major catalyst on the macro calendar, we can decide which way it's going to go. So it always wise to be patient, especially on Mondays, if there is not any major catalyst. Other than that, looking at the sentiment across major asset classes, it seems to me pretty much mixed, starting with the equity market. China A50 is down by negative 2.8 session to negative 1.28% so far, and the reason the markets are giving to the worst NBS manufacturing PMIs we got from China, and it's just continuously declining and just damped the China F50 equity market down by negative 2.9%, Hong Kong 50 down by negative 0.98%. Other than that, we're not having anything major out of the equity markets. Aussie 200 leading the pack, I think, and Euro, US, S&P 500 is just consolidating. There isn't much over here. Moving to the commodity section, oil tried to push higher after its last, I think on Friday we had a news coming out from OPEC that they are thinking, or they maybe start producing more oil than expected. That's what really damped the oil market. However, it just seemed that it just recovered a little bit, but still sitting at just a little bit 0.2% up as we head to the cash open. Other than that, we are having all of the commodity section: nat gas, copper, gold, I mean, you name it, everything is in the negative territory. So pretty much mixed bag if we just look at the commodity section. Moving to the FX, Aussie is currently leading the pack, and yen is the weakest. So safe havens are pretty much mixed, antibodians are mixed, because New Zealand is down, CAD is down, just Aussie is leading the pack. Euro USD just consolidating in that little range. So I mean, it is really tricky to understand why Aussie is right now getting so much strength, because with the inflation data we had last week, it was anticipated that it is going into a right direction, and with the levels we have in Aussie, it was pretty much wise, according to me, that going for a short position from there. But I really did not understood the strength in the Aussie also right now, and also last week. So we're just gonna put this Aussie on a hold for now, and we will also look for another opportunities if we get along the next days. Uh, from macro event point of view, if let me just bring in the calendar for you. Okay, it was right here. So the China manufacturing PMI is just sitting there 50.4. It's not doing that great, even though it came better than expected. But the market is not really happy about these numbers. Holidays, as I said, and other than that, we had some manufacturing PMIs coming out of Europe, showing a little bit of strength, but not that much. And S&P Global manufacturing PMI from England, United Kingdom, UK is just flat. So other than that, there isn't anything to look at for today. And moving forward to the next day, Tuesday, the major event I'm going to be looking at ISM manufacturing. Uh, uh, PMI, and the major component I'm going to be looking at the manufacturing employment index. Is it getting rise, or it's just deteriorating? And also ISM manufacturing price page, something to have an eye on, because technically it's fees to the pay that employees get, and eventually that can lead to the inflation and can create some hard times for the Fed to pivot their narrative from holding to cutting their interest rates. So this is something to keep an eye on. Other than that, it's pretty much snoozer day, so be careful out there. Don't rush into anything, and just wait for the opportunities we get across this week. And as I said, the risk is pretty much mixed. So if you have any questions, don't hesitate to let me know, and I end my video right here.